Is dollar cost averaging a good idea for Bitcoin and altcoins? Well, the strategy dollar cost averaging has been mentioned time after time again on this channel because I personally do it. But this strategy is being challenged with some evidence. So we're going to check out the challenging evidence by Mr. Crypto Love, and we're going to dive into that right now. But before we get into it, smash that subscribe button. So Crypto Love, he's a YouTuber. He says dollar cost averaging in Bitcoin is for idiots, evidence based. So we're gonna go into detail. We're gonna see exactly what they show, and what's my take? Did I change my opinion on dollar cost averaging? And we'll go over that at the end of the video. So he starts off like this.
In today's episode, I'm going to tell you why dollar cost averaging Bitcoin is stupid and why you would have to be an idiot.
So apparently, if you dollar cost average, it's stupid, and you must be an idiot. So let's get some more actual evidence. He goes over what dollar cost averaging is right here. So right here, he's just saying every month you buy a fixed amount, U.S. dollars worth or whatever dollars worth of a stock or a crypto. So every month you buy say $100 every month, and you just say January that $100 gets you 10 shares, in February $100 gets you 30 shares, 15 shares. You get the point. Basically a lot of people do this with 401ks or IRAs, where like 5% of their paycheck goes straight to the 401k every single paycheck, something like that. So that right there, first explain what it is, and then we're going to go into how it doesn't work with Bitcoin. He also mentioned that he has, and a lot of people have, been dollar cost averaging on Coinbase. If you want a dollar cost average with altcoins, you can use this thing called 3 commas. He mentioned, but he said, why wouldn't you want to do that when you see why dollar cost averaging just doesn't work? So it's definitely interesting. I have not heard of the 3 commas bots for dollar cost averaging. But continuing on, right here's the article. The dollar cost averaging, does it really work? Bitcoin case. Let's just see a little bit about that.
Daniel Simmering, dollar cost averaging doesn't really work, a Bitcoin case study. He actually took a look at Bitcoin and saw, using data, using science, using evidence, using mathematics, using solid.
So apparently there's science, data, evidence right here. We get into the the nitty gritty. It says for each day in the past, I compare the returns until present, the 5th of April 2019. So this article was created back in April 2019. It said, have you invested all at once versus dollar cost averaging? The investment over the next 12 months is equal in 12 equal installments. For example, if today was January 1st, 2017, and you have $12,000 to invest, it would be better to invest a full 12K on January 1st, or would it be better to invest 1,000 every month for the next 12 months? And the example he shows below, the returns from dollar cost averaging come to 174%, but if you purchase everything at once, the future returns come to 422%. So let's see a little more about that.
Present, had you invested all at once on that day versus dollar cost. Example, if today was January 1st and you had $12,000 to invest, is it better to invest the full $12,000 today, or better to invest $1,000 every month for the next 12 months? So what does he actually get? Well, he gets this chart here, but it's kind of hard to see on a non-logarithmic scale. So when we zoom in to a logarithmic scale, we can see this is actually a chart from 2011 to 2018.
So bam, so basically right here, this is the whole history of Bitcoin, like the BLX. Because right down here shows 2011 to 2019, because the article was wrote in 2019. The green right here is actually showing when it's best to dollar cost average in the green. The red is showing the best time just to buy all at once. So that's something interesting to look at. And you think about buying the dips, buying the dips, even if you dollar cost average, you could buy a little extra. But it's cool to see that, hey, my strategy is being challenged, and hey, look at it. The facts are showing that it's only good to be buying the dips when things are popping off, when things are going for that blow off top and then just about to enter a bear market, because that's what it's showing. That right there is what it's showing. It's best to just dollar cost average in, and if you have any lump sums throughout the bear markets, just dump it in whenever you have it. Don't wait. So it's definitely interesting to see that with with evidence, factual evidence. So continuing on, just goes into another case study right here of exactly like the models. Something that's interesting that I just have to keep in mind though is that when they say when they claimed back here, when it said 174% dollar cost averaging, 422% if you just put it all in once, but it's when on the chart though, let's go back, when on this chart were you putting it in, because if you bought here compared to here, you obviously would have had way bigger gains. So I feel like there's a little bit of subjectiveness there in when exactly you bought. And this also is going to imply that you actually have knowledge of the crypto space or just knowledge of investing in general. Because if you're a complete newbie, like I was when I first got in, you had no clue when this thing was going to top. You had no clue at a bottom. You had no clue what the indicators were showing a bottom or indicators were showing a top. You just had no clue. So how could you expect somebody that's new to know that? I think it's unrealistic. But he does get into something to make that simple towards the end. So as we show right here, it just says in summary, what the person learned that wrote it. He said most but not all of the time you get a better future returns if you buy Bitcoin all at once rather than dollar cost averaging. So they're just saying most of the time it's better, but not all the time. He said, however, dollar cost averaging does work better if you're buying during bear market or if the price is already some way up a large vertical rise. Dollar cost averaging is psychologically easier, so if in doubt, then rather dollar cost average and be happy. I think that's the biggest takeaway though, because I did scroll down to the comments, and the first comment was, although it may be less profitable, dollar cost averaging is about being able to get a good night's sleep. I think that brings up a great point, because how many people would put some bucks in when Bitcoin's at 10K, all of a sudden it falls down to 8,600 and then they can't sleep and they end up selling for a loss. So I think that brings up another point. I think this is for more experienced people in like more experienced investors, because in the beginning you're not going to be able to sleep at night. I totally agree. When it shows, I did miss to show the one chart, or did we not get to it yet? Right here.
The same thing.
So basically, this right here is just showing you it's like 24% of the time is actually better to dollar cost average. About 70 some percent of the time it's better to actually just buy in like all the time. He's saying these yellow rectangles right here, it's actually that's the best time to just dollar cost average. Well, and this is the projected one. So this is the best time to dollar cost average is what they're saying. So basically that's like 20% of the time. So like 80% of the time you're better off just putting it in. So I definitely get that, and now I'm seeing a difference. Like it's kind of turning my head a little bit. I'm seeing a different perspective, but I think he's just failing to miss something. Is that a lot of people don't have a large lump sum to put in at once. A lot of people have a job. They have like an income like every month. They get paid weekly or bi-weekly. So what are they supposed to do? Just hoard money and then eventually just invest at once? That's where the dollar cost averaging takes the guessed out of it, and that's where you can sleep better at night. And at the end of the day, yeah, I mean, you're not timing the market, you're not buying the bottom, selling the top, which I mean, very few people do. So I mean, you're able to get into the market, buy some more satoshis, buy some more good alts, some good link dot, whatever you want, index finance, but at the end of the day, you can sleep, and it's a great. In my personal opinion, it's still a great strategy. But he does bring up a good idea right here. He's showing you this chart right here. He's basically saying if it's below the orange, it's a good time to just buy whenever you want, like buy whenever. When it's above the orange is when to dollar cost average. So he does make it simple. He does make it simple for you, but it still does not address the people that are treating this like a 401k or an IRA to where they're investing like 5 or 10% of their income. So what are they better off doing? Piling it up, losing some on inflation, and then investing, or just dollar cost average it and call it a day? I mean, in my personal strategy with dollar cost averaging is when things have like an extreme pullback, you try to put in a little bit extra, because I mean it's just an extra pullback. It's definitely a great opportunity. I definitely put a little bit of money to the side for that, but I still like to put my set dollar amount in, just so I'm still getting some more satoshis and some of the good alts that I like. So I definitely love this crypto love video. I love that it challenged my strategy. I love that it made me open up to something different. The fact that like, hey, you know what? It's like what I've been doing, what I've been ingrained to, may not be the best strategy. It may not be. So moving forward, I may have to adjust it like a little bit. But I still believe for people that are new to the space, this is dollar cost averaging just takes the guesswork out of it, and you can sleep at night. I think that's great for you. I really, really do. You're still going to make good gains. You're still going to, and you're going to be able to sleep at night, because the odds are if you don't dollar cost average, you just put a large lump sum in, you're probably going to sell at a loss when it just dips a little bit, because you just don't have the strong hands. So that's my opinion about that. But once again, much love to Crypto Love, because it's definitely a great video. I love that it challenged my opinion. And you know what? It is like evidence based, and he gave a great way of, hey, taking the guesswork out of it. So let me know what you think about that down in the comments below. And as always, you guys can get your free tracking your crypto transactions made easy. So start 2021 right down in the description below. 100% free. Just put 0 in the checkout. So that's a wrap for the video. If you guys like this kind of video, like looking at someone else's video and seeing what's going on, I got this. Like someone in the comments mentioned this video, said, "Hey, you got to check it out. Dollar cost averaging is nonsense." So I had to check it out, and I wanted to make it aware to everybody out there, since I do mention this a lot on the channel. I'm still bullish on dollar cost average. I still believe if you're new, it's great. But if you get more experience, it's probably a better idea to take on this strategy. So I'm going to be implementing this, in the future for myself. So once again, thank you so much for tuning in. Smash that like button, subscribe for more content. As always, this is not financial advice, just pure entertainment, educational purposes only. And until next time, the Crypto Homie. We'll see you then.